All right, and again, we recorded a video previously where we go in detail into a lot of your trading strategies to kind of prepare for what's going to happen in the next few years.
Right.
Link below, londonreal.tv/Rickards. Barbell strategy, is that what you're talking about here? Because you mentioned that in the book, I think.
Yes. So the barbell strategy is, if I told you that we were definitely going to have inflation, you would know exactly what to do. Get gold, real estate, the kind of hard assets we were describing. Don't have bonds because they don't do very well in inflation. If I told you we were definitely going to have deflation, you would also know exactly what to do. You'd have more cash, you would have notes because interest rates are coming down, et cetera. What if I said that we're on the knife edge, that we could have a lot of inflation? I think we'll end up there, by the way, but not right away. Or we could have more pronounced deflation. How would you structure your portfolio? Well, you have to be prepared for both. So I call this the barbell. We got two weights, which are basically your asset allocation either end, and a connector in the middle. So your inflationary hedges are gold, hard assets, and the things we mentioned. Your deflationary hedges are 10-year treasury notes, et cetera, because as rates come down, bond prices go up. And your connector is cash. Have maybe a 30% allocation to cash. And people say, well, Jim, I hate cash. It has no yield. Why would you have it, et cetera? A couple answers. Number one, cash is actually a hedge against deflation. In deflation, the value of the cash goes up. Everyone knows in inflation, the value of your cash goes down. Well, the opposite is true. The value of your cash goes up. So you have a deflation hedge right there. It also reduces the volatility of the portfolio. It's the opposite of leverage. So if you got gold and things are volatile over here and notes are volatile over here, that cash will reduce the overall volatility so people can sleep at night. But the most valuable part of cash, and people don't get this, it has embedded optionality. If you're the guy with cash, you can, first of all, you can pivot. If either inflation or deflation takes the lead, you can pivot into that side of the barbell. But more importantly, if there's a catastrophic crash, you can take a deep breath, your wealth is preserved, and you can be the one who goes out shopping. And by the way, our friend Warren Buffett has over $115 billion worth of cash on the balance sheet of Berkshire Hathaway, the most cash they've ever had. He sees what I see. He sees this kind of meltdown coming. Instead of going shopping now, wait until things are on sale.
Yeah, this is an interesting point. And so for the average person listening, a lot of people own homes, they own other investments that just aren't liquid. So good luck selling your house in the crisis of 08.
Correct.
Especially if you're in Las Vegas.
Right.
Forget about it. There's literally no bid for your house. It's worth zero today.
That's right.
And so you can be like, what do you mean? It's worth $200,000. It's not. So that's this optionality I think you're talking about with cash. If you have that cash, you can make choices.
Right.
As long as that sovereign government is still going to be around, and the U.S. probably will.
That's correct. That's why you have the gold.
That's why you have the gold as well, just in case.
By the way, one of my favorite quotes, Mario Draghi is he's leaving, of course, on his way out, but he's my second favorite central banker in the world. My favorite is Vera Nabiullina, who's the head of the Central Bank of Russia. She really knows what she's doing, but Draghi's pretty good. He knows that central banks are impotent, so the less said, the better. You have this aura of power, even though you don't really have any. But he gave a lecture at the Harvard, I think it was Kennedy School, a few years back, and in an academic setting, you let students ask questions at the end. Well, there was a guy I know who's a reporter, but it was an open event, and got in the queue and got to ask his question. And he said, Governor Draghi, what's your opinion of gold? He didn't elaborate, just asked the central banker about gold. And everyone says, well, central bankers hate gold. But Draghi said a very interesting thing. He said, well, before I was head of the ECB, I was head of the Banca d'Italia, the Italian central bank, and I never sold an ounce of gold, not one. I considered it a hedge to the U.S. dollar. And it was an honest answer, and I applaud his candor, but I was shocked to hear central bankers say you had a hedge against the U.S. dollar with gold. That's what he said.
Okay.
And so that's where the gold comes in, to cover against the government risk. Yeah.
Okay, and you detail this in your books and in the video we talked about as well.